When applying for a mortgage, whether for a primary residence, second home, or investment property, you will typically encounter closing costs. A significant portion of these costs are made up of mortgage lender fees, which are the charges for services provided directly by the financial institution lending you the money. These fees are separate from third-party fees, like home appraisal and inspection charges, which go to companies other than the lender. On average, closing costs, including both lender and third-party fees, can range from 2% to 5% of the total loan amount. The exact figure will depend on various factors like location and loan specifics. What are lender fees? When you apply for a mortgage, your lender will issue a loan estimate detailing the closing costs, including the mortgage lender fees. These fees are typically listed under sections labeled loan costs and other costs on the loan estimate form. Common lender fees include application fee, origination fee, processing fee, credit report fee, underwriting fee. It's essential to review and compare these fees with each lender when shopping for a mortgage. Some lenders might list the fees up front, breaking them down into individual charges. Others may present a combined fee or all-inclusive cost, such as bundling the credit report and underwriting fees into the origination charge. When you get your loan estimate, the fees will be itemized so you can see exactly how much each fee costs. In addition to lender fees, there are typical third-party closing costs that you'll need to cover, like the appraisal fee, home inspection fee, title insurance, property taxes, homeowners insurance, and private mortgage insurance, PMI. Are mortgage lender fees the same as discount points? While mortgage lender fees and discount points may sound similar, they differ in purpose and optionality. Discount points are an optional form of lender fee, and they allow borrowers to pay upfront to reduce their mortgage interest rate. One discount point typically costs 1% of the loan amount and reduces the interest rate by 0.25%. For example, if you have a $400,000 mortgage with a 6.5% interest rate, paying one discount point, i.e. $4,000 at closing, will lower your interest rate to 6.25%. The key difference is that while you can choose to pay for discount points, other lender fees, like application or credit report fees, are mandatory and part of the lender's fee structure. How much are mortgage lender fees? Mortgage lender fees usually range between 1% to 2% of the total loan amount. However, this can vary depending on the lender and the services included in the fees. For example, the origination fee typically costs between 0.5% to 1%. Some lenders might charge a flat $500 fee for an application, while others may waive this fee entirely. While you may find no-cost loan offers, they often come with a higher interest rate or the closing costs rolled into your loan balance. Who pays for lender fees? In most cases, the buyer covers the mortgage lender fees, as they are the one taking out the loan. However, closing costs are negotiable between the buyer and the seller. In some cases, sellers can contribute a portion of the closing costs, typically ranging from 3% to 9% of the home's purchase price, depending on the loan program and whether it's for a primary residence or investment property. Some buyers may also ask the lender to waive or reduce certain fees. If you have a strong credit score, you may be able to negotiate lower fees with the lender. Additionally, in a competitive market, lenders may offer incentives, including covering part of the closing costs to attract borrowers. Can lender fees be financed into the mortgage? Yes, lender fees can be financed into your mortgage. This means the fees get added to your loan balance and you'll pay interest on them over the life of the loan. While this option can make the upfront costs more manageable, it often results in a slightly higher mortgage payment over time. For example, if you wrap $3,000 in lender fees into your mortgage, you'll not only owe the principal loan balance, but also pay interest on those fees for the full loan term. However, if you can afford it, it may be more cost-effective in the long run to pay for the lender fees upfront to avoid paying interest on them. Can you negotiate mortgage lender fees? Yes, it's possible to negotiate certain lender fees. When you receive your loan estimate, it's a good idea to review each fee carefully. Some lenders may be willing to reduce or waive certain charges, such as the application fee, underwriting fee, or origination fee, especially if you have a strong credit profile or if the lender is eager for your business. It's worth discussing with the lender directly to see if they are open to negotiating fees. If any fees are reduced, make sure those changes are reflected in the closing disclosure, which is the final statement you receive before closing.